Good morning and welcome. You're watching Inside India. I'm Amitabh Singh and I'm coming to you from New Delhi, the capital of India. Right behind me is the Finance Ministry. That's where everything is happening when you talk about the budget. They're all locked in. They're not allowed to get out as they firm up what the budget is going to reveal on Sunday, the 1st of February. And joining me, of course, from Singapore is JP Yong. JP.
Yeah, indeed. Good morning, happy Friday. Not as exciting as being out there on the and about in Delhi, but here I am helping you guys out on Inside India, and here are the headlines we're watching so far this morning. U.S. futures signaling a weaker start tonight as traders keep track of the government funding bill and also await President Trump's pick for Federal Reserve Chair, all due this Friday.
We're counting down to India's union budget, which will be presented this Sunday. The government's latest economic survey laying the groundwork for key challenges and targets in the year ahead. Plus, earnings season continues. Fintech giant Paytm and delivery platform Swiggy both posting results. We'll bring you the market action.
And while Amitabh has his first sip of chai out there in New Delhi, let's take a look at how things across the rest of Asia are trading, or how the rest of Asian markets are trading so far today. You're seeing this wall of caution for most major equity markets, from Sydney to Shanghai, from Tokyo to Taipei, most markets in the red. Again, a lot of that uncertainty coming from the U.S., especially with that potential for a government shutdown that they're trying to avert, and also President Donald Trump announcing supposedly his nomination for the next Federal Reserve Chair that he will posit for approval. You're seeing markets again, as you hear, the Nikkei 225 down by about 0.9%, and a few standouts like the South Korean Kospi holding on to gains and holding on to that breach of 5,000, up by 0.6%. One of the things that's also sapping confidence today happens to be the dollar index, which seems to have strengthened overnight, and again, much to the chagrin of many other currencies out here in Asia. If you can, as we wait for some of those currencies to come up, it's going to be key to look at how some of these FX pairs are actually trading in today's session. Among them, the Japanese yen, which has weakened once more based on that dollar resurgence, but again, that weekend not helping the Nikkei 225 in their Friday session out in Tokyo. Also, looking at the euro dollar and sterling so far today, both strengthening, both actually weakening against the greenback. We're seeing similar weakness actually, and take it from me, from other currencies like the won, for instance, in today's session. But again, this dollar strength also playing into one precious metal that's also selling off, despite the fact that markets are taking a step back today, and that is gold. It seems that all that glitters is it's losing its glitter so far, while it is holding on, down by about 3.2%. There are two reasons perhaps that markets might be positing for this. One, the dollar strength eating to commodities like the precious metal, but also keep in mind that if gold is starting to slip, there could also be some margin calls out there, which is causing some to actually perhaps take a little bit from this very profitable trade to try and cover those things in the markets, thus also signaling that there's still a lot of reasons to be quite cautious based on how the gold is moving down in lockstep with many other markets here in Asia. And of course, still early hours, but U.S. futures pointing some negativity when Wall Street reopens tonight. Again, that caution carrying over out to New York today, and you're seeing again the fair value implied open in today's session shows the Nasdaq, the tech-heavy Nasdaq, implying at a 136-point decline when the opening bell rings out on Wall Street. The S&P 500 also facing a possible 28-point dip when markets resume trading on the final trading day of the week out in the U.S. and out here in Asia, actually. President Trump, of course, saying he will announce his pick for Federal Reserve Chair later on today. Also, what's keeping markets a bit on their toes. President Trump saying it will be someone that's very respected and known to everybody in the financial world. Former Fed governors Kevin Warsh and Christopher Waller, NEC Director of the White House Kevin Hassett, and BlackRock's Rick Ryder are the final four, it seems, in the running. Now, according to Reuters, Trump met with Warsh at the White House on Thursday, with current Fed Chair Jerome Powell's term ending in May. Trump has been criticizing Powell, who he had nominated in his first term, for not lowering rates fast enough. It's also raised concerns about the central bank's independence among investors. The U.S. dollar, as you mentioned a while ago, looking quite strong in today's session and just inching up again, eating into those commodities and also coming at the expense of many other currency pairs. You can see here the Dixie rising and gaining ground, looking quite firm as compared to other days. And keep in mind that they are coming off of some of their lowest levels in months. But it seems today is the day when you're seeing a bit of a bounce back for the almighty greenback, up about 0.3% intraday. Senate Democrats and the White House also saying they've struck a deal to avert a partial shutdown and keep the government funded through to September of this year. President Trump posting on Truth Social that he's working with Congress to discuss the bill. Democrats had previously said they will not back a bill that included funding for the Department of Homeland Security, and that this new bill gives the DHS funding for just 2 weeks. It also gives both parties room to negotiate reforms to immigration or ICE forces. The House of Representatives will have until midnight Eastern on Saturday to vote on this bill. And if the vote isn't conducted in time, funding could still lapse for a couple of days, as the House is on recess until Monday. Now, taking a look at how oil prices are trading today's session. Oil prices pulling back in the Asia trade so far after rising about 3% overnight, perhaps just a pare back of some of those overnight gains, but you're seeing just a little bit of caution now with regards to WTI, which has fallen by about 1.9%. Brent crude down 1% intraday to just under $70 a barrel. Trump is also telling reporters just a couple of hours ago that he is planning to talk to Iran soon. Trump mentioned that he has, quote, very big and very powerful ships sailing to Iran right now, and that it would be great if he did not have to use them. Over to Amitoj Singh now for the Indian markets. Amitoj, it's going to be the last trading day. It is also for India, and a lot of eyes on the budgets. Of course, the question is how it might affect Indian markets. What are futures telling you right now, and what are you hearing on the ground as to how markets and traders might be approaching this very important budget for India?
Thanks, JP. Yeah, I mean, of course, after the economic survey, which basically paints the picture of what the government thinks the economy is looking like, that it will be, something that will filter into the market sentiment. Of course, these geopolitical tensions continue to factor into what's happening in the market. GIFT Nifty futures indicating a bit of a drop right now, 0.5% drop, perhaps. We're looking at, it has been a couple of negative days for the Nifty. And what we can say is that after the EU-India FTA and the defense deal between the two countries, that sector, defense sector, is looking like it might have its best week ahead. The rupee also opening weaker versus the USD is what we expect. Again, not surprising. This is what the condition has been. And the rupee also a factor when you talk about the economic survey. And the Indian government projecting that the country will grow 6.8% to about 7.2%. It's a little higher than what economists that have been surveyed have said. This is in this fiscal year, starting April. That's going to start slightly slower than the 7.4% expected this year, ending in March. That's according to its annual economic survey. It says the outlook remains positive, driven by strong domestic demand, even as that global uncertainty, those trade disruptions, and of course the US tariffs weigh on exports and investor sentiment. The survey also said a weaker, undervalued rupee has partly offset the impact of higher US tariffs, while low inflation gives policymakers room to support growth. There was another set of data changes that we heard about. India will reduce the weight of food in its consumer price index to 36.75% from nearly 46% under a revamped inflation series, which was expected, a move that could make headline inflation less volatile and aid monetary policy decisions using 2024 as the new base year. The basket will expand to 12 spending groups, including rural, house rent for the first time, and track prices from e-commerce platforms such as airfares, OTT subscribers or subscriptions and telecom services. Items like video cassettes, recorders and audio cassettes will of course be removed, as they're items that Indians no longer consumes. I still have some of them back home. India has designated coking coal as a critical and strategic mineral, aiming to boost domestic production and cut that heavy import dependence. The coal ministry said the move will help fast-track approvals and hopefully accelerate exploration and mining, including deep-seated reserves. Coking coal is essential for steel making, and India currently imports about 95% of the steel sector's requirements. The government hopes the new classification will strengthen supply security as India expands its steel capacity. Now we have with us a very special guest, as the finance ministry is behind us, and all the finance ministry officials are already locked in. They don't have phones, they can't go home. They are basically now going to be inside and figuring out what the budget should say on the 1st, that's Sunday, and the markets will in fact be open. With us is Rumki Majumdar. She's an economist at Deloitte. Rumki, we really appreciate you coming here and standing with us in the cold.
That's a beautiful day today.
It is actually quite beautiful. The beating retreat just got over yesterday, marking the closing of the Republic Day, the military parade that happens. You were, of course, watching the chief economic advisor, relay the economic survey. What was your first takeaway?
Very, very happy to hear that there is a confidence in the government that they expect the growth to next year to be around 6.8 to 7.2%. That tells you that even the government feels that the demand is resilient. And of course, it's not something that happened by chance. There has been a consistent effort that the government has made. Last year, the government did go for tax exemptions. They went with the GST reforms. They brought in about monetary policy easing. All were aimed at supporting the demand, and that has worked. We have seen India grow at 8% in the first half of the fiscal year. What is more interesting to see that the economic survey highlights where India needs to emphasize going forward. And that's where, like, for example, the services sector, the infrastructure push, AI, right, and investments, private investments, which has been modest so far, that needs to pick up. And all these discussions kind of aims towards that India now needs a supply side push. Demand has remained resilient, but now we really need to look at the supply side and take the growth forward.
So one of the things we were talking about before was that where is the room to bring in that stimulus? So the question is, do we need stimulus? Because the government has done so many things. They've done personal income tax, they've done GST.
Right.
What more can they do? And the question really is that, is PLI going to work when you have manufacturing as a focus? Is there something going to be for the defense sector after that India-Pakistan situation that happened, of course, in April and May? What's your take?
So I think there is a lot of room, need not be all focused towards demand. Now look at the supply side of the economy, because we are seeing the fact that private investments are not finding India as an attractive investment destination, because it's not that they do not have the appetite to invest. If you look at the outward FDI, it's been rising. That tells that Indian corporates are investing, but outside. We now need to bring in more money in here, and also more FDIs. FDIs, by the way, were the second highest in the last 5 years. It's just the fact that repatriation and outward FDI were very high, so net inflows kind of turned out to be quite low. But that said, we really need investments in the country, and for that, I think few things that India needs to address. One, there has been a long pending demand of improving the ease of doing business. Some of the regulatory issues, some of the compliance issues that every business, starting business, do complain about. Those needs to be fixed. Second, I think MSMEs need to be supported, and this has been a demand from even the business CXOs, because last year MSMEs did suffer a lot, and they need to be, and they are at the center of creating jobs as well as in exports, right? And they need that support to grow going forward. Third, I think now is the time India needs to notch up its spending on innovation and R&D. It's not that they are not doing. They have done a fantastic job, but I think we have one of the lowest R&D spend in India as a percentage of GDP.
Can it be a priority?
It should be, because if we want to move up the value chain in manufacturing and services, innovation is the way out. And I think if you look, our manufacturing is moving up the value chain, even though its share has not gone up as much. But look at 5 years back, we didn't have exports as semiconductor exports. We did not have electrical and machinery and electronics supporting exports that much. Today, we are one of those components are the biggest exports of the country. And that can only remain. That the momentum can continue if R&D and innovation happens. GCCs, one of the biggest contributors to India, that can grow only when we adopt AI, we deliver high-end services to the market.
There was a lot of surprising stuff actually said about AI by the chief economic advisor in the economic survey. I want to come to that, but I want to go back to manufacturing or defense. If there is only this much that stimulus that the government can give, or ease of reforms that it can do, what is your prediction in terms of defense specifically? Defense
will be a priority for sure, because at the end of the day, India cannot be safe and if India cannot be safe and secure, it cannot ensure a long-term growth prospects to its own citizens. So, and given the geopolitical uncertainties that we are seeing, we really need to showcase the world, not just for the fact that we need to be safe and secure, but we can do it. In fact, we can be the defense manufacturing hub ourselves, because we have done that in many cases. And the India-Pakistan war showed us that we could defend ourselves with our own indigenously produced defense products, right? So clearly, we have the ability now. It's a question of scaling up, and somewhere I think lots of private investments are coming up. Startups, if you see, a lot of startups are coming up in the defense.
So they'll get some support, is what you think.
Clear.
The defense stocks, having a very good week. We also had the EU-India security agreement. So all of that playing into the sentiment. Since you were talking about AI, I want to just quote a couple of things that came out of the economic survey. Given the constraints of capital, computing capacity, energy and infrastructure, pursuing scale in artificial intelligence for its own sake is neither efficient nor necessary, and India should aim for a bottom-up, multiple sector-specific approach to ensure it pays dividend. At the same time, it also said, the survey, that that there should be an AI economic council that basically focuses on skilling for this new AI age. They're contradictory, these two statements.
Not contradictory. They have to go hand in hand, because if you need infrastructure, you need skills. Who's going to run the show?
Yeah, but they're also saying that, there might be an AI bubble, so let's not focus on AI.
See, that is much more speculative. I think it's a speculation going on worldwide. I'll not get into that angle to it, but AI is here to stay, and it is going to redefine our way of doing business, our way of living. In fact, you and I are probably using it now and we can see the differences it has made in our own way of delivering services and providing solutions, right? So clearly it's here to stay, and we probably are at the beginning of this whole revolution that's coming our way. It can evolve in many ways, and it can really open up a lot of opportunities. And India must take the advantage, because we right now have the second largest AI skilled workforce in the world, right after the US. We are actually neck to neck with the US in this category. So if we have the workforce, all we need is to bring in more people, make them more agile, so that as jobs transform, people also get a lot of opportunity to move up the value chain. So I think it is here to stay, bubble or no. It is the fact that AI is.
So they're going to put money in AI. Also, the India AI Summit is in 3 weeks, so there will be something on AI. We know that.
Exactly.
The optics are just suited for that. But I also want to ask you, the rupee, the risk. The economic survey acknowledging that the rupee's weakening is a risk, and there will be higher inflation coming forward in the next couple of months, all the way to potentially 4%. What's your take on how that's going to impact just everything? Because I was talking to another economist, and they were saying that, yes, there is a lot of domestic positivity, but at the end of the day, when foreign funds don't come in so many capacities, remittances are lower, foreign investment is lower. So all of that is going to continue to dampen the rupee.
Yes, rupee has taken a beating, unfortunately, because of the fact that there's a lot of repatriation that has happened in the country over the last 1.5 years now. Where the problem is not economic fundamentals. If you look at economic fundamentals, all the parameters are really good. Inflation is all-time low. Current account is a decade low. Fiscal deficit is within the targets. GDP growth is very strong. So all economic parameters are basically very good. The problem where is the investment sentiments, and it is being weighed down by the fact that there's a lot of uncertainty, a lot of trade uncertainty, a lot of policy changes happening, and of course one of the biggest block is probably why India is not able to come up with the deal with the US. I think once that is inked, we will likely see a surge of investments coming back. That is probably holding up. And of course, there's also a global play of how China will supply its products to the rest of the world now that the US is becoming less of a friend, or maybe you can say a difficult market to sell their products. So clearly, India will make sure that going forward, it has to diversify its trade. It has to make more allies, partnerships, and this is what is going to take forward India in a much broader way.
Well, ma'am, thank you very much for braving the cold and standing with us. I really appreciate that. You know, Ajay Bangaya was in India and he was saying that don't focus so much on tariffs and the US. India will figure it out effectively.
India will always figure it out. I mean, we have surprised ourselves.
Yeah.
Nobody ever thought India could actually grow at a rate. And with the economic survey now saying 7.2, I'm actually much more optimistic.
What was your number?
We were around 6.9%.
Oh,
to
okay.
7.
You're still on the higher side of
We
the
were on it,
Economist.
yes.
Yeah. Thank you so much. Really appreciate that.
Thank you so much.
Okay, well, that was Rumki Majumdar from Deloitte right here. Well, at the center of power in India. We're going to give you a sense of what India's chief economic advisor has proposed. He said age-based limits on social media, citing concerns over platforms using predatory tactics to keep users engaged. This is a surprising response. Now, youths across India have voiced support for the move as the country joins a growing global trend. Australia became the first country last year to implement a social media ban for children under 16, while France's National Assembly approved similar legislation earlier this week. India remains a key market for big tech, as the world's largest democracy houses 750 million devices and 1 billion internet users. But also southern states in India already suggesting that they might ban this, social media for anyone under 16. So we're going to have to wait and see how this plays out. More news and updates, of course, on the other side. It is getting very close to budget day. We're in New Delhi. That, of course, is the Finance Ministry. We'll be back in a bit.
And welcome back to Inside India. Let's take a look at Apple shares, which are just edging higher in extended trade out in the U.S. You can see it up by about 0.5% to just over $259 a piece. First quarter earnings topped estimates thanks to record-breaking iPhone sales and sharp demand from India and China. CNBC's Steve Kovac breaks down the latest earnings in this report.
Apple delivered a blowout December quarter thanks to a surge in growth in the iPhone and services businesses. Here are the results. Apple EPS was a beat, $2.84 compared to $2.67 expected. Apple revenues were also a beat, a record $143.76 billion. The street was expecting $138.48 billion. That is up 16% year on year. As for iPhone revenues, they came in at a beat as well, 85.27 billion compared to 78.65 billion expected. That is up 23%. And services continue their double-digit growth, $30.01 billion compared to $30.07 billion estimated. That's up 14%. Now, China was a big highlight here. It is up 38% year over year to 25.53 billion. Tim Cook told me about those China results, saying, quote, "I think it's a result of the product resonating with the Chinese in a huge way. We just saw a lift that was much greater than we thought we would see, and so we were surprised. But it's very product driven. They love the iPhone." Now, one of the big concerns going into this report and the dominant theme of the earnings call was memory prices and how that would impact Apple's margins. With the rise in memory prices due to AI demand, Cook said he expects a minimal impact on margins in the current quarter. But he said he expects those prices to keep going up throughout the year, which have the potential to squeeze margins down the line. As for guidance, Apple says to expect more strong growth, with top-line revenue growing 13 to 16% year over year, all on the back of continued demand for the iPhone 17 and that strong services business. For CNBC Business News, I'm Steve Kovac.
And speaking of tech giants, Nvidia boss Jensen Huang is in, surprise, surprise, Taiwan, and says H200 AI chip licenses for China are in the works. The China Connection's Emily Tan joins us now with the details. Emily, what's the latest on this?
So as far as those chip licenses are concerned, JP, the H200, we've been seeing reports that China had given the green light to the likes of ByteDance, Alibaba, and Tencent to get something like 400,000 of these H200 chips. Well, that's fake news, according to Jensen Huang. He says that he's still waiting for Chinese government to decide whether or to allow these H200 chips, that he has not received orders from customers in China, and that he's waiting patiently and looking forward to a good decision. So he was speaking to reporters upon arrival into Taipei just yesterday. He was also asked about Trump's goal to bring 40% of Taiwan's semiconductor supply chain to the United States. And he said this is a move that would benefit TSMC, the United States, as well as Taiwan, characterizing it as an expansion of their footprint across U.S., Germany, and Japan, adding rather than shifting from existing operations. And he does believe that the majority of Taiwan's production will remain in Taiwan on the island. So he arrived there yesterday. He's going to be meeting with his employees tonight to attend a Weiya banquet. What is that? Well, that is a dinner ahead of the Chinese New Year, very traditional and customary, which he did similar in China just a short few days ago. And then tomorrow, he's going to be meeting with the AI supply chain heavyweights, TSMC, Hanhai, Quanta, Wistron. So they're going to be having another big banquet amongst the big tech heavyweights. And I'm sure the media will be, like a hawk, watching where he eats and what he eats and whether or not he goes to the Taipei night market. JP, it's back to you.
Full schedule for Jensen Huang in Taiwan. We'll see what else transpires there. Emily, thank you so much for those. We will be back in about 2 minutes. Don't go away. You're in Inside India. Welcome back. Loads of news flow moving the oil patch, including President Trump's comments on Iran. Access Middle East anchor Dan Murphy joins us now to make sense of it all. Dan, a lot of new developments again surrounding the oil space and oil patch. What can you tell us about how this might be shaping the outlook for crude oil in the future? And what's the latest with regards to President Trump's recent proclamations on Iran?
JP, good morning to you. Well, oil prices are actually pulling back in the Asia trading day. We are seeing some risk coming out of the market. But interestingly, the former U.S. energy envoy Amos Hochstein was on CNBC overnight and said the scale and type of U.S. military force now positioned in the region really sends a very clear signal about what is being considered and also raises some serious questions about what is going to come next. Of course, U.S. officials say the president is still reviewing his options on Iran and has not made a final decision on whether to strike. The president has also been hosting senior defense and intelligence officials from Israel and Saudi Arabia in Washington this week. Axios also reporting in the last 24 hours that Israeli military intelligence chief General Shlomi Binder has been briefing U.S. officials at the Pentagon, the CIA and the White House, sharing intelligence on potential targets inside Iran. And then meanwhile, Saudi Arabia is also pushing for de-escalation now as well. The defense minister, Prince Khalid bin Salman, is also in Washington for talks with senior U.S. officials as Riyadh here tries to keep diplomatic channels open and prevent a wider regional war. Of course, we know Saudi Arabia as well as the UAE have already made really clear that they would not allow their airspace to be used in any U.S. attack. But President Trump has also said he plans to speak with Iran, which suggests that maybe now he would prefer a diplomatic outcome, even as we see the U.S. continuing with this major military buildup in the region, including the deployment of another warship earlier this week. The Defense Secretary Pete Hegseth also weighing in earlier. Listen in.
So as a result, we're having to rebuild how our enemies perceive us. And when President Trump said, we're not getting a nuclear, Iran, you won't have a nuclear bomb, he meant it. And we sent those B-2s halfway around the world, and they never noticed. Same thing with Iran right now, ensuring that they have all the options to make a deal. They should not pursue nuclear capabilities. We will be prepared to deliver whatever this president expects of the War Department.
So the US sounding as if it is on a war footing now. For Iran's part, officials there continue to warn that any strike would be met with immediate and unprecedented retaliation, including against US bases and Israel. So the president is expected to reach a decision in the coming days. We really still do not know exactly what is going to happen next year. There is one line of thinking that perhaps this could also be the ultimate taco trade. That is, Trump always chickens out. Are we going to see a similar situation with Greenland here, where the president threatens everything, including tariffs, but then ultimately decides to pull back? Or are we at a critical juncture in the Middle East where the president actually decides to go ahead with this, strike Iran, and maybe even try and push for regime change inside that country? All eyes are on what the United States does next, risk assets and the region. On air, Jamatoj.
Hi, Dan. Thanks so much for that. Indian markets are unlikely to react to this development in Iran. India has not been purchasing a lot of oil from Iran, almost negligible for some time now. But also there are other products that India does buy from Iran. So we'll have to wait and see, particularly when you talk about rice, whether that's going to impact GIFT Nifty and of course, the market. GIFT Nifty right now signaling a slightly weaker start. We're looking at it to be down about 100 points. We'll be watching the rupee also, whether there will be intervention. We're coming to you, of course, from right outside the finance ministry in New Delhi, the capital. And on my left is the parliament where, of course, Nirmala Sitharaman, the finance minister of India, will be going ahead and declaring her budget. Usually it's about a 1 hour long speech. But this time, most economists feel it'll be slightly longer because they'll be watching for what she says in the fine print rather than the big reforms, the big announcements that sometimes come in focus. We have with us a very special guest who's made the trek right here, Vipul Rungta, Managing Director, CEO at HDFC Capital. Vipul, thanks so much for joining us and coming here. The sun is finally shining. And I'm sure that there's a lot to look forward to when you talk about the real estate sector. But when you think about what the economic survey just said yesterday, and what the expectations is from the budget, are you finding any parallels?
I think it's an extremely positive time for us to be there. I think what is happening as far as the Indian ecosystem is concerned.
So this happens, it seems like right now what's happening is that there is a senior VIP that's coming in. So we're going to have to go back to you right now, JP. We'll come back and we'll continue the conversation. This is usually what happens around this time. We'll be back in just a bit.
A very dynamic and also very crucial time and day that is in India as we lead up to the implementation, the announcement of the budget for that country. Now we're still in the thick of earnings seasons as well out in India. Indian gold loan financier Manappuram Finance reporting a 14.5% drop in third quarter profit. They were hit by weakness in its microfinance business and higher funding costs. Net profit slipped to about 2.4 billion rupees as revenue from microfinance plunged 55% amid rising defaults and cautious lending. That pressure was partially offset by strong growth in the gold loan segment, boosted by record gold prices, with gold loan assets jumping 58% year on year. Now, speaking of gold, we're seeing a sharp drop in the precious metals price today. But in the last 1 year, gold is up about 86% or over 86%. These higher prices are not deterring jewelry buyers in India, though, a country that's one of the biggest consumers of the precious metal in the entire world. Be it a wedding, a special occasion, Indians love their gold, though the amount has reduced now. Jewelers say higher prices are actually hurting sales volumes, even as demand remains resilient.
Everyone wants gold at home because its value is ever increasing. Gold has been a part of our families, from our grandfathers and great-grandfathers' generation. They believed in buying gold and silver as well. Today, even silver has touched around 380,000 rupees. We don't really understand this logic. We also want the prices to reduce. People say prices have gone up, so jewelers must be happy. We want the prices to reduce to at least 1 lakh, so that customers increase and clients come to our shops. For us, higher prices actually mean losses. We want prices to come down so that the number of customers increases.
Now we're going to be back after a quick break and hopefully sorting out some of our challenges out in New Delhi, but Inside India will return. Stay tuned. Welcome back to Inside India. And let's talk about Japan, which is the next stop for UK Prime Minister Keir Starmer after concluding his state visit to China. During his meeting with Chinese President Xi Jinping yesterday, he called for a more, quote, sophisticated relationship with Beijing. Our China reporter Elaine Yu has been tracking this visit. Elaine, what can you tell us about what arose from this quite important state visit by Keir Starmer to Beijing?
Hey, JP. So the two leaders spent about 3 hours together yesterday during a bilateral summit and also over lunch. And President Xi, speaking with the Prime Minister Starmer at the Great Hall of the People, said that China is ready to develop long-term, consistent and strategic ties with the UK, saying that the relationship has been full of twists and turns in recent years that didn't serve the two countries, while Starmer was joined by more than 50 delegates. 50-strong delegation, and he said China is a vital player on the global stage and that it's vital that we build a more sophisticated relationship with the world's second largest economy. Let's take a listen to how he envisioned this relationship.
I'd like to echo a Chinese phrase, which I think captures the essence of what I'm talking about. Pursue common goals whilst reserving differences. That is what we're working together to achieve. And I want to say that my profound belief is the more we engage, the more we visit each other, discuss, trade, build business links, cultural links, sports links, you name it. That is the way to develop the mutual trust and respect that is so important to the relationship between our two countries as we go forward from here after an 8-year absence. 8 long years, 8 wasted years in many respects.
So business and trade were the key focus of this summit, and China is now expected to allow visa-free travel for British nationals for 30 days, and it's also halving tariffs on Scotch whisky, while the UK drug maker AstraZeneca is planning a $15 billion investment into China to expand manufacturing for medicines and also for R&D. Now, Starmer also talked about cultural and sports links, and the two leaders are big soccer fans. Xi is known to be a big supporter of Manchester United, while Starmer supports Arsenal, and as a gift to the president, the prime minister gave him a football that was used in last week's very tight match where United beat Arsenal, and some people saw that as a gesture of humility from the UK prime minister.
Very interesting. Sports diplomacy always works, I guess, in most occasions. President Trump, though, clearly watching China's moves with the West and commented on that Starmer-Xi meeting. What did he have to say?
Yeah, Trump was at the premiere of Melania, the film by the First Lady, and he was asked by reporters about the UK pledging more business cooperation with China, and he said it is very dangerous for the UK to do so. But he added that it's even more dangerous for Canada to get into business with China. This, of course, is referencing the Canadian Prime Minister Mark Carney's recent visit to China as well, and also his provocative speech at Davos, where he talked about middle powers acting together to resist hegemons. And this is also could be Trump posturing, according to analysts, ahead of the USMC free trade agreement that's up for renewal this week. But looking at how state media from China has described this relationship, they said that this should be a relationship that's not easily swayed by external pressures, referring to the UK-China relationship. And China's foreign ministry have also said that any Canada-China trade agreements are not directed at any third party. But it'll be interesting to see what Trump does, if anything, to the UK, especially after it threatened Canada with tariffs over its China tariff truce. JP?
Very interesting and very interesting developments right there. Elaine Yu, thank you so much for the latest as Keir Starmer begins the second leg of his trip, this time in Tokyo. Back to India, though. Air India is boosting its fleet, ordering 30 Boeing narrow-body jets and converting part of its Airbus A321neo order to 15 long-range A321-XLRs. The airline announced Thursday at India's Civil Air Show, or made this announcement at India's Civil Air Show on Thursday. The 737 MAX purchase includes 20 MAX 8S and 10 MAX 10Ss, bringing the Boeing orders, that is, to about 250. As for the Airbus XLR's deliveries expected between 2029 and 2030, which will allow Air India to open longer, less served routes. The expansion marks another step in the Tata-owned carrier's turnaround, following years of underinvestment under state control and recent efforts to reclaim market share from its global competitors. Now, 2025 saw strong passenger demand for air travel based on the latest data from the International Air Transport Association, or IATA. Travel and transport reporter Monica Petrelli joins us now with more. Tell us how robust this demand growth was, Monica.
Well, despite the cancellations, despite all the complaints about how uncomfortable it can be to travel these days, demand for flying continues to go up. And we're seeing a couple of new records here, of course. Now, first, we saw global demand to fly go up in 2025 by about 5.3%. Capacity also rose about the same amount. But here is the new record. And this one is one the airlines will like, but passengers probably not so much. A new record for load factors. That's talking about how full the plane is. This has now hit 83.6%. Now, most of this growth in demand is happening in the international flight space, and that's because, well, domestic really recovered faster in those post-COVID years. But the biggest growth that we can see in international flights coming in Asia Pacific, which really brought up the tail end in terms of recovery. Here we see international traffic up about 11% last year, putting it above Latin America and Africa. Now, domestic demand, though, well, broke a couple of records, too, both in terms of passengers and load factors. However, IATA does note that domestic demand growth is starting to slow. Last year, held down by the world's largest domestic market, and that was the United States, which saw its market actually contract just slightly, about 0.6%. But you can compare that to India, where domestic demand grew more than 5%. Now, that's a drop from 2024, but it's more than double the global average. And we saw capacity growing even more. So when you have more capacity than demand, well, that means the load factors actually dropped. But before you get too comfortable thinking about your next flight, still no, IATA says India has the largest, the highest load factors in the world, about 85%. That means there's not a lot of empty space on planes.
I've got a solution for those cramped planes, Monica. Perhaps ordering more planes and opening more routes. But this is not as easy as it looks, because there's still questions about a possible shortage of aircraft out there to satisfy this burgeoning demand. How difficult is it for airlines right now to lodge some of these orders the same way Air India just did?
Yeah, absolutely. So ordering them is easy. Receiving them is the difficult part. So, of course, we know India has huge amounts of planes on order. The issue, though, is the supply and how fast that they can be made. So IATA notes the biggest headache for aviation in 2025 was the supply chain issues. And that, look, that's saying a lot, because there's a lot of headaches in aviation these days. But the other issue with not getting new planes touches upon another crisis in aviation, and that is, you can hear all these stats with demand going up. The airlines will love this, aviation industry will love this, but sustainability advocates that will wince hearing all of this, and that's with sustainability. Newer aircraft are more fuel efficient. That's another reason why airlines want to get their hands on them. But second, this is also important as SAF begins to really, this is sustainable aviation fuel. We are not seeing the types of leaps and bounds that we were hoping for SAF. And there's a lot of finger pointing going on there. IATA having a word to say about that. IATA not liking the mandates. We're seeing a mandate kicking in here in Singapore later this year. Europe already has one. I'll be talking to Willie Walsh. He's the Director General of IATA on Monday about this very topic, as well as many others. We will bring that to you ahead of the Singapore Air Show next week. That interview coming on Tuesday morning.
And Willie Walsh known to be quite opinionated and very candid about what he really thinks with regards to many of these matters. And we're looking forward to what your conversation yields, actually. Monica Petrelli, thank you so much for those very important updates on the state of aviation and how difficult it is to satisfy this growing demand to travel via the skies. Now, Prime Minister Modi at an air show in India said the country plans to be the leader when it comes to sustainable aviation fuel. But what does IATA exactly say about that once again, Monica? Again, we did talk about what they were talking about there. But again, the shift that is from aviation fuel or sustainable aviation fuel, or trying to make sure that you can transition from one fuel source to another, also quite challenging. I mean, what are you hearing with regards to that? Because it also impacts supply chains, it also impacts your ability to service some of these things as well.
Yeah. So what we're seeing is SAF much more expensive. Sometimes 3 times even more expensive. The airline saying, look, we can't afford it, and saying, look, with places that have mandates, the makers are actually inflating the price even higher because they can do so. The makers on their part say, look, we're not seeing people buying this as much as we thought, therefore our investments very risky, therefore the price goes higher. So this is a circular argument that we're seeing here. Therefore, that's why we're seeing IATA coming in saying, scrap these mandates, go for incentives for production. So again, saying government needs to lead the way, but not in the way of a mandate.
Okay, didn't realize I had another question in my pocket there, apologies, but thank you so much for indulging us and providing even more detail than we actually were hoping for. Very enriching updates right there. Well, let's get back to Amitosh Singh in New Delhi. He sorted out some of those issues and he's still continuing this a very interesting conversation on the sidelines. Amitosh, happy Friday, I guess.
Thanks so much for that, JP. Vipul Rungta, HDFC Capital, joining us right here outside, of course, the power of India. This is New Delhi, the finance ministry behind us. Vipul, thanks so much for taking time out. I just want to get a sense from you about affordable housing, because when you talk about the real estate sector, that's the big focus ahead of the budget. What do you expect?
See, what is happening in India is that there's rapid urbanization that's happening. About 350 million people will shift to the urban India over the next 5 to 10 years. If that kind of thing has to happen, India has to grow. What we need is high quality small homes for the middle class, because India, which was a pyramid structure where it was a top 1% having 60-70% of the income, that is turning into a diamond which is bulky at the middle. What it is doing is that the aspirational youth, 1 billion people below the age of 35, when they are getting the jobs, we are having GDP per capita from $2,700, which is likely to go to $5,100 per annum. What it is going to do is it's going to result in a tremendous demand for quality homes, because only when in the Indian ecosystem you have a home, you actually have the confidence to go and take risks to move to the next level. That has probably worked with most of the people in our generation. And if India has to grow, affordable housing, which is mid-income housing in urban areas, has to catapult. And we expect very, very strongly that the government will bring whole amount of initiatives related to this. The primary issue here is not demand side. There's a huge demand. The primary issue here is supply. Can I make, for an average developer, whether it's India or globally, specifically in India, can I make it profitable for a developer to do high quality small homes? Where do we get the land? Where do we get the construction? All those factors come into it. And I think it's purely about having a framework. It's about breaking, taking care of what is a broken supply chain. It's those factors that need to be catered, and we are very, very positive.
So there are a couple of points here. Real estate developers are focusing on luxury housing because that's where they get their profits from. So what can this budget do to change that fundamental structure? And the other aspect is, you said land reforms. Urban cities have lots of land, but they're not actually being available to these real estate developers, and that's the key problem. So how will that get fixed? Because that's a very cultural thing in India. The governments want to have control on those parts of land that are sitting idle because of zonal problems or whatever. So how will that get fixed?
No, I think there are very clear fixes for everything. For example, say 2-3 decades back, when we had a problem of exports, we said we are exporting much lesser. Government set up a very beautiful scheme, which was the SEZs, the Special Economic Zones. What was it? It is that what is a national priority? If I have a piece of land, if I have an infrastructure in place, I can go into a particular setup, say that I want these concessions. The government wanted those concessions to go into a specific sector, and that's what happened. So SEZs were set up all across the country, whether it is city center or outskirts, and it happened. What happens in case of schools, colleges, hospitals? It's not that you cannot do it. There are things which are earmarked for that. Similarly, some first principle thinking needs to be done, and I think a lot of initiatives are being done. For example, land records are now digitized in about 25 to 27 states in India. There can be purpose-built housing where you can give acquisition or you can give development approvals specific to it being purpose-built for affordable and high-quality housing. And it's not only important, Amitoj, to just give cheap homes. You need to give quality, cheap homes in the transport corridors. You need to give it where the person can travel, can have access to school, can have access to social infrastructure, and those kind of integrated things are very easily possible. Obviously, the road is not so straight to this so-called easy solution, but if the intent is there, things are possible.
The intent has been there. The ease of reforms, there's a focus on that. I want to talk to you about foreign capital because the flows declined by 16% to about 3.7 billion. But there were two of these biggest deal announcements of the year by international investor Brookfield. So is that a concern ahead of the budget, that this foreign capital that's generally been flowing out, net, whether that'll continue to make a difference when you have the narrative focus primarily on GCCs, but again in urban centers and not across other parts of India?
I actually, in fact, I don't believe some of these numbers that are being, because this, first of all, the caveat on this report that you're quoting is only on reported deals.
Right, fair enough.
There are a whole number of deals which are not public, which may, even by large investment banks, that may probably not be part of this, A. B, let me give you our example. We started 9 years back as HDFC Capital to do supply-side financing for quality, affordable and mid-income housing in urban India. We started with $200 million. Today we have $4.5 billion.
Okay. Unfortunately, we're completely out of time, but complete your point very quickly.
But quickly, there is no doubt that there is tremendous foreign interest in India to take care of this housing.
So the budget, maybe that'll bring that. We'll hope for that. Thanks so much, Vipul, for joining us and being with us out here. All right, well, that's it for us. We'll be following the budget. It's on Sunday, on the 1st. Thanks so much for joining us.